Jito says that all the fees and value generated from BAM and from their engine is going to go to the DAO Treasury.
Yeah.
Which then will be ransacked by all manner of corrupt.
Yes, thank you.
Parties.
Yeah. Yes, but the conceptual, it's the same as L1, the conceptual
The
argument.
platonic ideal. Yes, the platonic DAO would be very valuable.
Here we go again. We're back in the Spelunking podcast, aptly named to confuse and uninform. I think this is like episode 45. Wow.
This is 45. Technically 46 because we published an episode 0.
That's true. Yeah. And also, every now and then I'm like, wow, 45, 46 episodes. That's a lot. And then I think about the time span in which that has happened and look at other podcasts. And I'm like, oh, we've been very, very lazy. Anyway, there's stuff happening. Quite a lot of things all over the place. I think this here we'll just chat about some of the news and announcements that have come up that seem interesting. Should we get started with Jito? BAM.
I mean, we can. The Jito.
Do you want
to?
Yeah, let's start there. Ricardo can explain what it is, and then we can explain how it's just flashbots. I don't actually know if it is. I'm just assuming.
Actually, I'm not entirely sure if it's just flashbots because I think that a lot of the flashbot stuff is open, but I'm getting ahead of myself. Yeah, like Jito announced this thing called Block Assembly Marketplace, called BAM, which is basically a new approach for block building on Solana. Now, without going into the technical details too much, we can discuss those so people can look them up. What I find it interesting is because Jito has consistently been good at fending off threats, it seems. And one of the things that I was wondering about is what was going to happen with Jito once Fire Dancer came out. Because effectively there are two reasons to use Jito, right? One is to make sure that your single transaction lands. The second one is to make sure that this particular block of transactions or this particular sequence of transactions lands like you expect. The reason why the first one is still an issue, even in the face of Solana having priority fees, is because the Solana scheduler is pretty shit. And even if you put up a high fee, it's perfectly possible that a lower fee, higher compute transaction will end up being processed first, just because of where it ended up on a thread, right? And that's tacked on top with the fact that the Solana validator, the ANSA validator, let's call it, like Aave, whatever, it is very inefficient. Now, once transaction processing gets faster, then you can also do more transaction review on top of this. So it's perfectly possible that it would be easy to tack on top of Fire Dancer something that obviates the need for the first use that people have for Jito. Now, what Block Assembly Marketplace does is that it brings in this network of nodes running in theory with trusted execution machine environments that guarantees that transactions are going to be executed in a certain way. And that actually allows you to bring in plugins like, just-in-time oracles and stuff like that to make sure the transactions happen in a way that you expected, even though the network may have moved in the milliseconds since you sent it out. And instead of sending, as far as I understand it, instead of sending the transactions directly to the leader, you just send them to a VAM node, which sends it to a network and processes it over there. Now, given that this is supposed to have some CK proofing that, so anyway, they're going to take it, they're going to sort the transaction, then they send them to the leader, which is supposed to send back a CK proof that the transactions actually happened. Now, this means that the leader, whomever the leader is, needs to be BAM aware up to a point, needs to be able to reply that, yes, I did this like what you expected. And I imagine that the first nodes that actually end up supporting this are going to be Jito client nodes. But even if they're not, even if anybody else, even if anybody else integrates this functionality later on, like say, I don't know, Firedancer or the ANSA client does it, then even then they're still behaving in the way that effectively the Jito network expects. It seems like what Jito is doing with this is taking out all the MEV stuff from their client, moving it to this network that in theory will be open eventually. And this reduces a lot of the, let's say, reliance on people actually installing their own client. So I don't know. I think it's a pretty smart move to try and future-proof themselves, which also, of course, lets them do a lot of noise. Lets them make a lot of noise about decentralizing themselves and open network and yada yada. Even on the current announcement, the open sourcing of BAM will not come into the very tail end of it. So I don't know. I think it's pretty clever. The same way that kind of StakeNet was a good head fake in Marinette's direction. This seems to let them stave off eventual incoming threats from faster or more feature-full clients. So hopefully I didn't make a mess of that. Did it make sense to you guys who hadn't seen it that much in depth?
I haven't seen anything on ZK being involved. I saw that they wanted to use trusted execution environments.
I believe there was on the introduction or maybe in some other documents that I read. Let me find it.
I don't really understand why the leader would need to be BAM aware. Surely BAM needs to create blocks or transactions that are accepted by the Solana protocol in the way that.
Yes, but the Solana protocol accepts one transaction at a time. Jito's unique thing is that it lets you guarantee that these 3 transactions will go into a block in this order. Not necessarily that the whole block will happen, right? But that these 3 things will happen in this particular order. If BAM is not the one that's actually registering the block, but the leader is, then you need the leader to be able to signal that, yes, I did exactly what you expected with this, whatever n transactions inside the entire block that I created.
Right. Okay. It sounds like flashbots.
Yeah, I think so. As I said, I think that flashbots is more open now.
Yeah, one thing I always find interesting. So like, I mean, it's just like it's very similar in the sense that like in Ethereum, kind of block building largely happens outside of the protocol and whatnot. What I always wonder about in terms of like high performance protocols is, does using something like BAM create additional overhead in terms of performance? And I imagine it must. Like there must be, like if Solana is sort of performing at its absolute maximum in terms of like data transfer and execution and whatnot, how can adding a new layer of networking be as fast? Like in my mind, it should slow it down. And maybe that doesn't matter because you're specific, like maybe you don't care if it happens in the next block, you care if it happens in like the next 10 or something like that. But I would imagine the latency of getting your transaction into a block is a bit slower.
I would argue that is the least interesting use case. And in most cases, chances are you might not even, assuming that, which is again where I think that this is smart, assuming that you have, that you had a decent transaction scheduler on Solana, something where that, whatever the best price paid versus compute cost is going to go, guarantees that you're going to go in first, right? Assuming that you had that, you wouldn't use Jito in the first place. You would just send your single transaction directly to whomever the leader is. What you say is true. This is probably going to add a cost, but the same is true of absolutely any new feature that you add. Any new feature has a cost. And what this is bringing is, it's kind of like removing from the Jito node the it's removing the requirement of running an Jito client, while you still get the added feature of having your transactions execute in certain order, or having your set of transactions execute in certain order. That is something that the Solana client or any Solana complying client right now cannot guarantee you. Right? The protocol would need to include that to make this relevant. At which point this would still have the added feature of the plugins and the extra oracles and whatnot. And yes, it's perfectly possible that you don't care about, like to say, if you're a trader, having this transaction execute now has a value, or having this transaction execute fast has a value, but having this transaction execute fast with up-to-date information potentially has a higher value, which is where the plugins come in.
Yeah. The other thing that confuses me a little bit, maybe just because I don't fully understand it, I hadn't read about it before this, is that at least on the Flashbots side, like a lot of the kind of value proposition for the users of Flashbots is the ability to essentially like auction off MEV. And so when you have like a sandwich opportunity, basically like auctioning that off, and then so someone else can take advantage of that. But then Jito BAM is positioning this as somehow like an anti-MEV thing. And maybe that has something to do with trusted execution environments. Like if that's where it happens, you don't know. But I wonder what the, like, I would imagine that a lot of the adoption of Flashbots comes from that value extraction capability. And then if you have something similar which doesn't have that, is it as useful? Like, why do you want things to happen in a certain order? I think a big reason is because there's something happening where you see an arbitrage.
Well, for starters, I wouldn't say that Jito is positioning this as anti-MEV. I think they very specifically talk about like harmful MEV or some such, right? I mean, their whole business model is MEV.
I know, but they're like expressly saying in a lot of the writing that it's like extraction becomes value creation or something like that. Like they are at least hinting that it's somehow like not for MEV, and like, and again, I'm coming at this from like the Flashbots side, and Flashbots is all about MEV. It's about quantifying the commercial value of that MEV and auctioning it off.
When they mention harmful MEV, and I have heard them speak a few times about this, and I don't know, Solana community calls and whatnot. It seems that mostly they are talking about things like evil sandwiching attacks with massive slippage, this kind of thing, and not, again, any potential arbitrage opportunity that you may find between two different things. Particularly if you read the documentation, well, what they have published, the announcement, they focus a lot on your transaction remaining private until it's ready, which is again where the sandwiching interference seems to be coming in. So I really wouldn't read this as an anti-arbitrage overall. I mean, there are a lot of arbitrage opportunities between, say, two protocols that have a slightly differently outdated oracles, right? This kind of stuff would not stop you from doing any of that.
Yeah. Have they published like documentation about this or anything?
What I read was the introduction stuff from I think it was like 7-8 days ago. I don't think they've published anything more in depth than that.
Okay. Well, interesting. Mika, do you have any takes on this?
No. I guess in enough detail. I guess one question I have is like, what is the competitive dynamic, and like how do user transactions actually land into this thing versus like still building blocks kind of like out of protocol or in the normal fashion or out of this system? Like, you know, there's like you're competing. If you're a DEX, you have the same like you have different flow sources, right? So I'm just trying to wonder like what the like kind of incentive is to be here versus not be here. But that's a longer thing to have to look at.
Yeah, I would suspect that again, this is not meant to replace. Okay, this seems to be like an evolution of what Jito's already doing. Already, a lot of protocols, as far as I know, are sending their transactions to Jito first if there's Jito leader and whatnot. The only thing that this seems to remove is the need for a Jito leader for that to happen. You only need a PAM aware leader for that to happen, which could be any other client, right? Because adding the PAM specific behavior is going to be a much smaller lift than adding the entire Jito behavior. So I would say that this doesn't change the incentives. It doesn't bring any particularly new features to you off the bat, except maybe the plugins.
So it's kind of like taking what the Jito client was doing and offering that sort of as a service outside of the client implementation. To other
Exactly, and
clients.
which is why I think this is so fucking smart. First, it removes the need for them to start to continue maintaining the client and keeping up with whatever answer updates are coming up, which has to be like a thankless, boring task. And second, it allows you to just, hey, go to, I don't know, Firedance and say like, hey, here's a patch which lets you take advantage of this network, right? Which is, I don't know, 500 lines of code, whatever small thing, as opposed to running and maintaining an entire validator. It's while removing again for the threat for you of newer, faster, better featured clients, right? It's not as much that it's technically interesting, although I do think that we're going to see some interesting stuff happening with the plugins, is that I think it's really smart business-wise.
Yeah, the plugins kind of remind me of like Uniswap v4 hooks in some ways. And I do think there's probably interesting stuff. I think one of the issues with things like that is always that it's kind of like it's hard for like a normal person who's not like involved in infrastructure development or design to like really conceptualize like what are they for in a way. Uniswap v4 hooks might be a little bit easier, but even there, I think like when the v4 white paper was published, people were a bit like, okay, like what are these things? And this is even like a level below that. So I think like I'm just making this up. I don't understand the system exactly, but Ricardo, maybe you can clarify. But in my mind, for example, you could have a transaction that uses like a just-in-time oracle, meaning that like right before the transaction kind of goes through, it's checked that some prices are the way they you thought they would be, and so you can do arbitrage in that way, when usually the oracle price has a delay, and so you're taking on essentially like risk in terms of the price changing in the meantime, because the oracles are often decoupled from like the actual market. So yeah, and there are other ways of going around that, but that's sort of like one example. I don't know, can you think of another example where you could do something kind of like right at the moment of block building that where being super real time would be a benefit?
Maybe not real time, but sequencing is like for DEX is if you want more beneficial terms for market makers, for example, you can prioritize like cancel orders over something else to make it more friendly to the liquidity provider. That's kind of a classic example, and like what centralized exchanges tend to do, at least for their internal maker, and then what Hyperliquid does as well, for example.
Yeah, they actually mentioned that example.
Premier partners.
Yes.
Yeah, but I mean, I can see this changing. Generally speaking, I can see this changing the way that people write on-chain keepers. Basically, You get to add, if you're running a liquidator, you get to add a lot more restrictions to the moment that your liquidation transaction is going to be executed. If you're a DEX and you're paying to sort these things out, then you could actually give priority to orders that are liquidating a debt, simply because this reduces the risk to the DEX, right? Even as the DEX could be tipping or something here. It just right there, I see this opening up a whole host of possibilities. And I imagine that once people are done playing with that, they're going to come up with other use cases. But just for the DEXs, really, this would remove a lot of the either the brute force necessary, or the fact that something that you see on periods of high volatility where market makers or where liquidators, is that if things are getting crazy, liquidators just go like, oh, no, I don't want to touch this shit, and then just go offline for a while. So I would imagine this would remove the risk of that happening.
For perps exchanges, if you prioritize liquidations first, you can actually formally prove within like certain bounds that the DEX is actually solvent at every single scenario, which you can't do if like you don't have that information. But if you have that information, you can actually know for full that like the DEX is solvent in every single scenario.
Okay. Well, before we go forward, I have a question for you guys relating to this. Do you think that the traditional way the blockchains have worked is you have like, the validators and the building blocks, and then you have users posting transactions and whatnot. It seems to me like across a lot of different modalities, we're moving towards a situation where actually the sort of traditional way of interacting with blockchains, where I like create a transaction, it gets broadcast to the network, kind of goes away. And most of the interactions with the network happen through different ways. It's kind of like the institutionalization of blockchains in a sense. Like you can think about rollups as one example of this, where your interaction with like Ethereum is being mediated by some provider that like Base or whoever. You can think of kind of like flashbots as another way where you're like bypassing sort of the normal route to get to the chain. This sort of seems as like another example of that. Like, do you think blockchains sort of become these systems where like end users don't really interact with them anymore, and it's kind of like purely different types of intermediaries that kind of interact with the network itself?
There's a market efficiency argument for it, because the only reason this is happening is inefficiency in the market from the user perspective. So because like of the kind of things that chains natively have in their protocol design, it means that it leaves open, like in the naive case, just sandwiching, and that is a market inefficiency. So as long as it's not managed in protocol, which like can be hard to do or can be hard to define in any kind of reasonable way, it happens out of protocol, which like the answer is yes, but it's due to like market inefficiency. If the chain itself was capable of having like a block building mechanism which was perfectly valid for everyone in a sense, and has some mechanism to force that upon them, then you don't need this extra step. But if you don't have that, and that's not what the chain does, then you will ultimately build like another layer for transaction execution.
Well, look, I would argue that first of all, the user broadcast the transaction to the network thing hasn't been the approach for a while now. I mean, that's definitely that's very much a legacy implementation of the mempool based chains. Already vanilla Solana does not operate in that way, right? You need to know who to send this transaction to, because chances are it's going to get forwarded like 4 times before getting dropped. So that's already that's already been going the way of the Doro, just simply for execution efficiency and B, reliability. On a mempool approach, a user has no idea what the hell happened, right? There's no guarantees other than my transaction might be floating around somewhere. On an approach like Solana, so the very least you have the guarantee that if you haven't heard back from us between 2.5 seconds, your transaction did not happen, try again. Now, if you think that that is going to, even leaving this aside, even if you see Solana's approach as a very ephemeral mempool of sorts, right? Like which I don't think it is, but let's see it if you see it that way. There's this great line from a talk that Edmund Gadgard gave, I think a few weeks ago. I can't recall if it was a protocol or something, talking about AT Proto, where he says that if your protocol lacks features, the market will add them with centralization. And I think this is something that we're going to see over and over and over and over everywhere. And even a well-funded team like Solana, you can't expect them to handle every possible case that may come up, right? So you are going to get things like this. And actually, quite frankly, I think it's great that this shit is coming up. I mean, frankly, mostly because I don't think that this would exist if Jito didn't have the impending threat of Fire Dancer coming out, the impending market threat. So for me, the fact that these things keep coming up is proof that the market mechanism is working.
Well, this is an argument for more L1s continuing to come in the future, right? Because ultimately, these kinds of features, like once you start to add decentralization to them, then the question immediately becomes like, this should just be its own L1 that just does this out of the box, right? Like, because otherwise it adds latency unnecessarily.
Unnecessarily is doing a lot of heavy lifting there. The main question is, can you?
I mean, you can do. The market adds these features in a centralized fashion because if you have 2 layers of decentralization, you add a huge amount of latency unnecessarily, right? It's either implemented in the core protocol or it's a semi-centralized external service / feature. And so then
again,
the question always becomes like, if we just implemented an L1 where this was implemented in the core protocol, we get kind of the best of both worlds.
Sure, that's first of all, that's kind of like the XKCD Comic-Con standards right there. Yes, if you wave a magic wand.
Look, the whole blockchain ecosystem is an XKCD Comic-Con standards.
but my point is,
worry about that stuff, right? Because it's like, well, you just don't add the problem, you don't create problems with decentralization, so you don't have the problems that you're building here. Like, even they take like, just, you can think of like even oracles or things like that as like an extension of that market capability. And those aren't necessarily like decentralization based feature. Can be, and that's, whatever. But the point is that you don't have this problem.
You weren't watching the Polymarket thing with their UMA decentralized oracle.
I was actually watching it closely as one of the largest Polymarket users in history. and then yeah, like that's again a classic like token voting kind of thing, though. Like,
yeah, just why object to unnecessarily is just looking at this both from a logistics and engineering standpoints. If you could wave a magic wand and integrate all these features into the Solana validator with fairly little maintenance cost and or processing or maintenance overhead, then sure, yeah, definitely this should be on the validator. Sure, why wouldn't you have it, right? But in the real world, implementing anything you add will have trade-offs. even if it is how hard maintaining the core thing is, and how quickly you can change this other part, or how easy it is to replace this other part if, I don't know, Jito were to go in, for instance. So that's why I think say that unnecessarily is doing a lot of heavy lifting there.
I'm not disagreeing with that. I'm just pointing to like for example, like the easy example is roll-ups, right? Like roll-ups make a huge amount of sense, insofar as you don't start decentralizing them. When you start decentralizing them, suddenly you run into issues.
Sure.
And there's arguments that you don't need to decentralize them, but the point remains that like there is a construction for an L1 protocol which doesn't need to make that trade-off, because it's not two separate consensus mechanisms, where you can have like the benefits of decentralization while also getting the benefits of the sort of the construction you're making out of protocol at the outset. But we don't need to argue about it too much.
There is a Platonic chain somewhere that may fulfill that one day. Yes.
If Jito does this very well, and let's say it's just like how all blocks are built in the future, that's an argument for Jito being super undervalued.
Yeah.
If the conceptually, if the market like on a relative basis to Sol, at least you can like say everything is overvalued, so you can like have that. But if you take the baseline of the L1 premium and where it even in some conceptual way justifiably could come from, like that kind of valuation, then you would say that this is a big part of that kind of action and deserves a higher valuation on a relative basis.
If we're talking about considering becoming an equity investor in Jito, the company where value may end up accruing, then I would agree. If we're talking about the Jito, the token, then we would need to look into if there's actually any value it will have.
50-50 split could be on right now on everything. So
Jito says that all the fees and value generated from BAM and from their engine is going to go to the DAO Treasury.
Yeah.
Which then will be ransacked by all manner of corrupt.
Yes, thank you.
Yes. But the conceptual, it's the same as Demos L1, the conceptual
The Platonic ideal. Yes,
conceptual
the Platonic DAO would be very valuable.
Yes.
I can wait for the Jito VAM education fund.
Yeah. Okay. Well, let's move on to treasury companies, and I guess to some degree, specifically the Solana treasury companies. So one thing, just for some context, we've spoken about these before. As a quick recap, they're basically companies that are listed in the traditional equity markets, and their main value proposition is that they're going to accumulate some token or crypto asset, and they try to come up with different ways of accumulating them in like the best way, essentially emulating strategy, which is the most well-known, used to be MicroStrategy, which accumulates Bitcoin, taking on a lot of debt to buy Bitcoin, and trying to craft those debt terms in a way that like makes sense for the equity investors, and over time, as long as the asset appreciates, they do quite well. So Strategy has been trading at around like 1 to 2x their underlying Bitcoin holdings. Right now it's about 1.7. And now there's a whole bunch of treasury companies for all kinds of protocols. Like there's some for Ethereum, there's some for Solana, there's some for I think there's one for Hype, like a whole bunch. The ones I've been tracking most closely are the Solana ones. And something has been happening in the markets now, which is interesting and worth discussing, which is that DFDV. So kind of like two things happened. One was Upexi, which is, I think, the largest Solana holder right now. It is trading under their underlying Solana valuation by like a decent margin as well. So that's sort of like point number one that happened and is interesting. The second is that maybe relating to Upexi, hard to say, could be also relating to just like how it was trading before, but DFDV, which has kind of been trading between like 1.8 times their underlying Solana and up to like 4 times their underlying Solana, has had pretty serious compression in that multiple in the past few days. I think it's down to like 1.6, 1.7, pretty much in line with strategy.
1.34 is going to be like the case right now. Like,
Really?
Yeah, 1.4-ish is depending on where the thing opens. But I think right now, if you did the math, it would be like 1.35.
Okay, so trading really low. And so like one question I think to just like start from is like, is this some sort of like systemic thing where people are like, did someone like wake up and is just like, wait, I paid 3x for Solana, like, was that what happened? And that's why it's compressing into kind of that like micro strategy range, or is there something else at play? And then secondly, like, can that something else explain Upexi, or is Upexi somehow unique as a situation?
You could argue from the financing perspective, I don't know if this is true or not, but that BTC has a longer history of outperforming your debt terms, in a way, like just the year-on-year compounding. And if you think of it as like an efficient market, you could say this is the market saying to a degree that they don't believe that can happen for other assets in the same way. Like Son, for example, the hype one, backed by Paradigm, that one's trading like, it's either trading at par or just a bit above anymore. So that's kind of like one answer you could have here. The second answer you could have is like less of a intelligent market answer, which is just like, oh, we're oversupplying the market again, which is like hitting these things in a way that but of course, like that should happen on the BTC side and just doesn't happen to Sailor because he's like Jesus or something. Right. So I think it's kind of hard to figure out what's like intelligent market behavior and what's not. The kind of bear case that people create from this is like, you have this kind of quote unquote death spiral scenario where if you can arbitrage the NAV in the other direction as well by selling the underlying. And if you do that in a material fashion, you can like tank the price. DFDV has actually talked about this and wants to set up like, in theory, some sort of like redeem system in a way against that, which would kind of like clear that book like that adverse flow entirely. But like, yeah, there's some couple of thoughts on what this could mean.
Mika, you have looked into this more than myself, I expect, because I stopped kind of like tracking what strategy was doing, given that they launch a stock issuance or a debt issuance every 72 hours or something. But from recollection, what they were doing was selling different shares, class shares, and or just raising convertible debt at some absurdly long period. Whereas what I recall reading about Upexi was that they were selling shares or out, which I would see why an existing investor would be concerned about the sale pressure on that.
Yeah, that is, I don't know the specifics of each of these, but the current deals for their initial fundraise seems to be very much more structured in a way where the kind of investors unlock very quickly. So you may just have a dynamic where the existing investors, via some way, whether they're allowed to sell already or not, are getting rid of their position. So you just have like a classic supply demand dynamic happening for them in the short term. And this doesn't actually, like, the bullish case you can make is one that once that's over, these will like settle at like higher premiums actually. And you're now just like taking the dump in a sense. That could be true for like each of these, like based on what I know about these names, I could imagine that being very true at like today on like July 31st. That does make sense to me. And that you're seeing an exceptional amount of selling that you wouldn't see normally because someone has just like tried to arbitrage the difference and are getting out of their position.
Yeah. So basically, they have reinvented token dumps with extra steps. Nice.
Yeah, like in an elegant fashion, I would say, where they're not only dumping the token, but they're dumping it at a premium because they like you can dump the underlying and then dump the stock and then buy the underlying, right? So if you want your position back and you'll make money on it as long as you sold at reasonable terms, which these have given plenty of opportunity to as well. So
Yeah, what I'm saying is that if and I have no idea how much diligence people actually do when jumping into these things. The multipliers sometimes seem to indicate that very little. But if a large investor came into this thing thinking that it was going to be something structured like, say, a structured debt like MicroStrategy's offerings, and then realizes that there are a whole bunch of old shareholders becoming liquid and dumping on the market, then why would you re-up? Why would you recommend anybody else puts money into this thing, which would definitely affect confidence in the company, it seems.
maybe, but the premium, like the premium has been pretty large, and it's that scenario. Maybe just be like, okay, I'll just live with that, and it is what it is. And I still think it's EV positive. That's the answer.
So I mean, so I think one big thing here is that in general, like everyone kind of looks to MicroStrategy for that range to NAV. And there was a point in time probably where there was kind of this moment of like, we don't know what these other treasury companies are going to have in terms of that range because they're newer. In theory, there's probably more upside, et cetera, et cetera. And so that sort of hype may have just pushed the prices up to higher NAV multiples. And then that sort of like unwinding might be one aspect of it. The other thing is just that there's a lot of options out there now. Like it's getting like kind of crowded, and so do you, like, just as with tokens, you do need to have like reliable kind of like where is the demand coming from? And it may be just that the demand for treasury companies has been somewhat tapped out. And so people see like a short term that like they don't anticipate demand increasing, and so then they're getting out of the position because they're taking some win or whatever.
I agree with that. I agree that I would explain the DFTV, but because basically the NAV ratio compression, it wouldn't necessarily explain you going underwater and remaining there. That's just people dumping.
Yeah, well, I don't. Well, yeah, and then we can, speculate about whether somebody knows something, but I don't think it's like, I don't think it's like crazy. So, I mean, you could have a situation where just investors feel like the way that Upexi is going about it is going to lead to dilution and not to like value creation. Like that would, in that sense, make sense. DFDV makes a big point of like increasing Solana per share. Their internal incentives are structured around can they increase Solana per share. So like that, I think, is a clearer message, and maybe people believe in that more. But then there's another way or another reason why this could be happening. And that's simply that people think that the underlying is going to go down. And thus, like, because the stocks are less liquid than the underlying by like a significant factor, right? And so like if you have any kind of lack of faith in the underlying, you're going to see a bigger swing in the stock than in the underlying. And I think that, looking at the DFDV price action, it has looked like DFDV has started to kind of lead. So when there's going to be a drop in Solana, DFDV goes down first. This may be just coincidence, but there's some element of that. The other thing that makes me think that might be part of the reason is that I have heard from different institutional investors that they simply don't believe that the fall, like they basically think the market is done and it's done for this year. Like it's gonna go down significantly.
You mean like BTC, like the market? Market.
Everything, yeah. They basically think after the summer is gonna crash. I'm not so sure about that. I don't know the rationale behind that sort of thinking. But I have heard this from a couple sources recently. And so like if that is a more common sentiment in sort of institutional circles, then you do have a situation where like you would expect the treasury companies to tank like pretty early. And probably like earlier than the actual underlying assets.
If that were the case, I agree with the lack of trust in the asset. This would definitely impact. If you see these things as leverage underlying, then this would definitely have a higher impact on the token than on the underlying. If it were an issue where investors generally think that the market is going to tank, then we would be seeing this compression also in MicroStrategy, which has also been voraciously acquiring Bitcoin and seems to have no trouble selling its debt. I would need to see if MicroStrategy is the only one with this happening. But,
so like I think we do need to separate Bitcoin and everything else a little bit. Because like it's not trading kind of in the same way. They're not all trading in lockstep. And so I think it's quite feasible that people generally think Bitcoin is going to be fine, but then like everything else is going to go down.
Okay, so the thesis there would be that these people who say that the market is going to tank after the summer thinks that all the market except Bitcoin, or at the very least that Bitcoin is to the point tank proof or tank resistant. Is that
something like that? Yeah. And so I don't know what they think, right? Like I probably I can guess at the data points they see. Like I know from the exchanges that organic buy demand is like complete crap. Like basically every new token launch is completely artificial. There's just it's like the organic buy demand is just not there. Everyone who does an airdrop, everyone who receives the airdrop sells immediately. Leads to the price charts, so you can look at like everything that's launched in recent memory. Why I don't necessarily buy into the market is done is because I think like more and more crypto just trades against macro essentially. And it does seem fairly likely that there's like a historic injection of liquidity into the markets coming this year. So I like, who knows, right? Like maybe the US government is orchestrating a pump and dump of a lifetime and signaling, you know, the complete opposite of what they intend to do and so on. That's possible. But at the same time, like crypto becoming so central to like the US government strategy and the obvious need for liquidity in the markets across not just crypto. I don't think people care that much about crypto as such, like TradFi. Like it does seem like it's there most likely is going to be a liquidity injection, which in my mind is very good for crypto. And so I at least would be unwilling to take a very hard position on whether or not it's going to happen. And I don't think, like, I think we're out of the clear cycle. Like, we'll still have cycles and whatnot, but I think this past period has already proven that it's not going to look the same way as it has before. And so it could be that people are kind of over-indexing on past behavior and so on. At the same time, I hear myself speak, and I'm like, it sounds like super cycle talk, which I've always had on before. So
I wouldn't say it sounds like super cycle talk for what it's worth. Mostly because I was on the super cycle. Anyone who was actually around the super cycle and following Suzu, remember that it was not just like, oh, it's not going to get as affected as before. It was like this thing is going to be perma up forever and ever with maybe small dips, right? That I don't think that's necessarily what we're saying here. At the very least, what I'm hearing you say, and correct me if I'm misinterpreted it, is that given the likelihood of a massive capital injection, and anybody who has been even slightly online knows that Trump has been vociferous about him wanting an interest rate cut. Given the likelihood of a capital injection, it is unlikely that we will get a massive dump on, at the very least, on major assets.
yeah,
Which is something that I would agree with. It's hardly a prediction; it's a conditional. I would agree that given the way that things look in the U.S., that is one of the few levers he has to make people happy, right? Like, oh, look, market went up. Everybody loves things. Particularly how shit all the things seem to be going, generally speaking. So I don't know, would I be going all in at this point? No, definitely. It's not like prices you want to start buying at. Do I think that there's any clear signs that we're going to get a mega dump? I don't particularly think that either. I mean, it's just market seems to be again on this what I described a few months ago as not any sort of particular cycle, but a White House driven market. So we're just gonna roll with that.
Well, like I think so. I think easy money is hard, like there's less and less of it, right? Which in many ways is a sign of maturity, right? Like that's what you would expect to some degree. Like it's just like if you're doing some basic grift, it's just like very unlikely that it's going to work out, which is sort of how it should be, right? And so we'll see how it goes. But I do think that, like, my personal opinion, and this is definitely not investment advice, is I think the Treasury company sort of multiple contraction is overdone. I think it's like, for whatever reason, I think the market is pricing them a bit wrong, and it could just be that like anything that's not Bitcoin simply has like more volatility in its NAV multiple. And this might just be an example of that. So like if from here on out, like these just trade to like higher multiples than a strategy, and then at times lower multiples than strategy, that would make sense to me. But I don't see a world in which these trade sort of like consistently lower than strategy, unless there's something like uniquely strange going on with a specific company. I don't know.
I don't really have a strong opinion on that. You guys have looked into it more than myself.
I'll give a couple of takes here. One is that the demand side being awful is a good sign to me, in a sense, because then the demand side can like go up. So
it only get better from here.
Yeah, it got only get better from here, but like, I like the market right now in the sense that, or I like what the market has been over the past year, which is very much an asset picker's market. That's been kind of like awesome in a sense. It's been like very hard to perform with BTC, but it's also been possible. So like that is the sign of a healthy and kind of more mature market in a sense. And I think there will be like bubbly effects every now and then, but like if that's the status quo, like that's not bad, as long as like crypto continues to grow in various ways. On the Treasury company side, I do think there's probably like a over time pretty material difference in how some of these are run, that will ultimately impact their success a lot if we just like take the view of 3+ years. Because the way to finance these things is like, for MicroStrategy is two things. It's like, at the markets essentially, like you you can like kind of close down the NAV premium by just like selling in a sense. And that's one way to make money. Then there's like all kinds of debt instruments. So it's essentially leverage. So what you're talking about is, are these people capable of taking on low leverage over a long time, which outperforms the market? And like, given the cost of capital and stuff like that, like it's not an unreasonable thing to do if you're kind of bullish on the ecosystem in the 5+ year kind of cycle. And then like DFDV specifically, I think if you're doing a lot to boost just revenue from the DeFi side and from like integrations and things like that, like they have a Sanctum launched the LST right now that generates the money. They have the 50-50 revenue split with Bonk for Bonksol and all that kind of stuff. Like you can actually make over time a lot of money on that. And if those things make the market confident in the kind of 3-year time span, like I don't know what's going to happen next week to the premium, but over the long term, I think that can justify like a MicroStrategy like perpetual instrument, at least for quite a while, in practice, even if you're kind of very negative on these things and don't like that fact. I think that fact is actually true. So over the long term, there may be like huge disparities in which ways these kind of companies and their treasury companies go ultimately. And that's why I think as a part of a crypto portfolio, making that bet, like Teemu said, not investing advice, like it is justified with some percentage of your portfolio. And I think you're missing out if you don't do that. If you already have existing crypto exposure, for example, like I don't know, you have like 20% of your net worth in Sol or something. Like there's no reason why 2% of that shouldn't be, 30 percentage points of that shouldn't be in the FDB, in my opinion. Like,
Yeah, I guess it's kind of like, yeah, I wouldn't like go all out buying now. It's certainly not like the buy opportunity of a decade. But I wouldn't want to have no exposure either. Like I would like to have some exposure. And we'll see how these things do. I think we'll probably update once this sort of starts clarifying, because I think it's super interesting to see how they start trading. This is part of why this is exciting, is because it's like it's unknown ground, right? Like we've only seen MicroStrategy. We haven't seen what this looks like, kind of like with all these different companies. What dynamics affect their price, how they're compared to MicroStrategy. But I'll make the official prediction now that I think they're going to trade, like they will trade between a higher NAV multiple and a lower NAV multiple than MicroStrategy, simply given the volatility of the underlying and the volatility of the stock itself. So I think that should be how it goes. If I'm wrong, I'll be very curious to see how I'm wrong.
So you're making the bold prediction that they're not going to trade at exactly the same net multiple than MicroStrategy, to like 3 decimals.
Mm,
I mean, you said that they're going to trade between a higher or a lower, probably like sure.
well, I'm talking about the range, kind of is sort of what I meant. So, like, I think
What sort of
I think
multipliers would you book market at?
Like, I do think that they will at times probably trade close to 1, which is basically like very unlikely for strategy to trade at this point. And at highest will trade like at 3, or something like that. Like I think that variance makes, and this is sort of like, this is partially also caused by the fact that the underlying is so much more volatile than Bitcoin. And so, and then there's that liquidity element. So when the underlying does something crazy, which really Solana hasn't during the time that these things have been going, basically, you'll have like a much more dramatic move in the price. And so then you you get these like imbalances in terms of the stock price and the NAV, like the value of the underlying, which are just bound to be a little bit more dramatic than they would be on strategy.
Very agree with this take.
And furthermore, they seem, at least, to be like there's greater potential for upside. So if you're doing like a very naive analysis and you look at strategy, I'm not saying this is how you should think about it. In fact, I don't think you should, but like I'm sure many do. In fact, sometimes I trade based on the feeling that other people will trade based on this analysis. But basically, you look at strategy and you look at it like the market cap, the chart, and then you look at one of these and you're just like, okay, this is much earlier than that. This went up this much, like that kind of like very dumb analysis looks very good for these companies. And I guarantee you some people will trade it that way. It's really just a question of like how well known they become. Right. Like, and I think this is actually one of their biggest challenges is like most people have not even heard of UPEXI or DFTV. While MicroStrategy, led by Bitcoin Jesus, it's going to be in the S&P 500. Like, can you generate that kind of name recognition or something, anything close? Like that is a big driver. Like the discovery problem is real for these companies, I think.
It's not just a discovery problem. There's also mindshare dilution, right? There's MicroStrategy has you need a Bitcoin treasury company, strategy is right there. Oh, you want to start a treasury company? There's this 20 things that may or may not be open, offered in your jurisdiction. So there's that.
Yeah. Well, I mean, but that same mindshare dilution. I mean, I wouldn't be very worried if I was MicroStrategy, but like that happens in Bitcoin too and everywhere. Like we will have this. Like, or we've been seeing this thing of like everybody and their uncle is doing a treasury company because of the NAV premiums and maybe this is just like a reaction to oversupply of that type of asset. Like I said earlier, like it could be that like the market is essentially saying like we don't have space or don't have capacity demand for this amount of these assets. Like we're going to choose whatever one or two in each of these assets to go with.
There's somewhat of a parallel with like in some cycles BTC underperforming simply because the market is being supplied with random stuff that people are jumping into, but then they eventually over the long term don't find those reasons. And I think there the kind of quality difference and the kind of mindshare difference that accumulates over time to one or two of these kind of plays out in the same way, which is, well, eventually BTC actually outperformed a lot, but it had to fight through an era of oversupplying with like things where people didn't really differentiate between BTC and the others, but over time the differentiations happened as maybe in a much shorter cycle than what has happened to BTC because that process took almost 10 years in a sense, but like kind of I think there's an analogy there that's kind of reasonable.
Yeah, the main issue that I think we run into making certain like, do I think you should have side of exposure to this or not? Is that while I agree that there's a higher potential for upside on one of those things, purely again just because they act as leverage, you also get into the situation of picking the right one of this, which I don't think most people are going to be capable of evaluating or have mental bandwidth to evaluate how these various mechanisms are structured.
The answer needs to be clear for them. The market needs to give them the golden child, like
yes,
in a way.
Which is again why I don't expect people to start rushing, people or funds to start rushing into things like UPEXI versus the FTV or what have you. The market hasn't given them an answer, and things make it kind of sketchy. So I don't know. This basically seems to me kind of like saying, if you think the market is going to go up, should you have a percentage of your wealth not in SOL, but in say Jito or tokens with a higher beta? Sure, that'll definitely give you a higher multiplier. Picking the right one is going to be a tricky thing. right? Like a lot of people did not have as much exposure to ETH because they thought they were gonna make bank with the layer twos, and every single motherfucker underperformed ETH, right? So even if you went with a basket approach, you lost money.
Even though ETH was shit as well.
Yes, which is quite an amazing accomplishment.
I'll say this just qualitatively. I do think there's actually a right answer among the existing Solana treasury specifically. Like
I
I will
would
say,
agree that
I think
there's-
there is like a specific answer here. I don't know if Demo agrees, but like I think there is a winner actually here, and like I'm betting on that winner. You know,
I would agree that is likely.
It's
to
not
be the
clear
case.
yet. It's not clear yet. Like the way that I think
not
about
clear to
it.
the market, but I think it may be clear
Yeah.
from like
So, but this is kind of what Ricardo is saying is like,
Yeah, man.
like there's a lot of upside in figuring out who the winner is before everyone else figures out who the winner is, but it's difficult and you may be wrong and so on. But and the way that I think about it is like, can I imagine things that a new company could do or achieve that would suddenly put it like higher than whoever I think the winner is? And right now in the Sol arena, I still can. So I'm not like 100% sure, but yeah, I have like a fairly high confidence level. But as with everything, like I just keep my exposure at a level where I'm pretty comfortable being completely wrong and losing it all. So I don't need to worry that.
Again, the only thing I have with that, the only issue that I have with that is that again, we live and breathe this freaking space every day. And we're all arguing about like, yeah, we're fairly sure there's a winner and we're fairly sure it's probably pointing in this direction kind of thing. Someone who's just considering some allocation who's like, you're going to be completely freaking lost. So do I think that they benefit from having some allocation? Yeah. Would I trust them to pick the right one, or would I recommend that they try to find one? Like,
well, those people, if they're LPs, should probably go talk to Mika then, huh? Anyway. Let's
I
finish
believe
here.
it. I hope that didn't break any laws.
Well, it's worth having a conversation.
Yeah.
Anyway, let's end there. Thank you to everyone who's been listening. All 3 million of you. It's a pleasure.
Always here for a weekly dose of optimism and certainty on the markets.
Weekly.
Yes. Optimism and certainty is what I thought you would object to.
I'm
not sure I created a banger sentence in this episode that gets used as the front kind of thing, unfortunately.
Don't worry, man. I'll just lie and clip a whole bunch of bits together.
We'll use AI to just we'll do the deep fake thing, and yeah, it'll be great.
Yeah,
It'll be great. Soon we won't have to do this ourselves. We'll just generate it. All right. See you next time, everyone.
Ta-ta.